Hi, I'm Alex. Welcome to the channel and thanks for watching. In today's video, I want to talk about one of the latest SPACs, the special purpose acquisition companies, that's getting a lot of attention and could potentially be really interesting. Landcadia's acquisition of Golden Nugget Online Gaming. This video will follow a similar format to my Hylian and Workhorse videos, and if you haven't seen those, links are in the description below. I did a detailed analysis of both of those companies in the videos and concluded that my concerns were focused around valuation, and they were both timed really well because the next couple of days saw massive share price increases for both of them. So that's brilliant. So in this video, I'm going to start off talking about who Golden Nugget are. Next, I'm going to touch on the transaction. Then I'll look at everything that we need to know about them as investors. And then finally, I'll touch on what I'm doing. Now in this video, I'll also touch on a couple of things that I've not seen anyone else talk about and that are so important to us as investors, so you don't want to miss those. Now if you like this video, please smash the like button, it's massively appreciated. If you like investing related content, if you want to see videos on the latest SPACs, detailed analysis of growth stocks, of tech stocks, and of some really exciting penny stocks, then please subscribe because this is the right place for you. So on this channel, my aim is to try and upload 2 times a week. However, in my full-time investing job, I'm still working 12 to 15 hour days. So bear with me if that schedule is slightly erratic. These videos do take some time to research and I don't want to just put out content saying the same thing as other people have said. So please bear with me on that. I'm not a financial advisor. This video is purely for entertainment and educational purposes only, but let's get straight into it. Who is Golden Nugget Online Gaming? So Golden Nugget itself is a large gaming company, but the specific transaction here is just for its online gaming operations, Golden Nugget Online Gaming. So that is exactly what I'm going to focus on here. The business was founded in 2013 and is the largest iGaming casino-focused operator in New Jersey. It basically offers its customers an online casino experience. Games like slot machines, roulette, blackjack, things like that. The company is also really innovative too. They were the first company in the US to bring out a product that had a live in-house dealer on the games. And they've also developed loads of other exclusive casino games on their platform. And that's so important when winning new customers. Interestingly, the company also reports some of the best customer monetization figures in the industry. Over its typical 5-year customer life, customers spend $7,700 on the platform. So what is the transaction? Well, here it's another SPAC acquisition, a special purpose acquisition company deal. Landcadia, the SPAC, a company listed on the stock market where shares are sold to investors and the proceeds from selling those shares is kept by the company and then used to finance the acquisition of another company. They're also commonly known as cash shells. They're quite common and they allow a company that's not publicly listed to very quickly become listed on the stock market through the acquisition by the listed company, the SPAC. Oftentimes you'll see criticisms of SPACs arguing that the company that's acquired is just not of sufficient quality, is not a good enough business to have a successful IPO, an initial public offering themselves. An IPO is where a company for the first time ever sells its shares to the public and lists on the stock market. Now in this exact scenario, I don't think this is the case. I think Golden Nugget Online Gaming is actually quite a good business. The reason the transaction makes a lot of sense here is because it's a carve-out. A carve-out transaction is one where the division or a segment of a business is sold by the parent company. And that's what's happening here. The online gaming division is being split from the overall Golden Nugget business and will now operate as a standalone business to some degree, but we'll come on to that in a minute. Post-transaction, the company will have $88 million worth of cash and will have reduced its debt by over $150 million. And those eagle-eyed amongst you will notice that actually $24 million was spent on early repayment fees of that debt. Now these fees are fairly common in consumer finance products as well, mortgages, other products, etc. And that's exactly the case here. Because they're repaying the debt earlier than expected, they get charged those fees. So, as an investor, what do we need to know about Golden Nugget Online Gaming? Well, firstly, it has a really recognized brand. The Golden Nugget brand is a household name in the US. They have over 600 outlets, 3 hotels, 4 aquariums, 2 amusement parks, and 5 casinos. They're currently located in 39 different states, and that gives a great foothold for the online gaming business too. Now it's important to remember here that this is only in relation to the online gaming part of the business. But the overall brand is so important and that will help the business grow going forward. Next up, we need to think about the positioning of the business. The online gaming business is already the #1 iGaming business in New Jersey, where it has approximately 18% market share. Additionally, it has the best-in-class ARPU rates, average revenue per user. What that tells us is customers are willing to spend much more money on Golden Nugget Online Gaming products than they are on the competitors. And that's a really good sign for giving us comfort how the business may grow into other states. Now next up, we need to think about the resilience, the defensiveness of the business. If you've seen any of my other videos, or you know my background as a private equity investor, you will know how much importance, almost obsession, I place on resilience of a business. Typically you'll find B2C businesses, businesses that sell to consumers, to be less resilient than B2B businesses. Oftentimes because the product that's being sold falls into discretionary expenditure, and that means when disposable incomes are falling, typically demand also falls, and that's reflected in the sales that the business generates. However, gambling and gaming actually I see as slightly different. As a vice, it has less of that discretionary element, And you can see this if you look back to previous recessions and look at the revenues of gaming companies, you'll see it's much more resilient versus other areas of discretionary expenditure. And that's a good sign, especially where we are in the economic cycle right now. Next up, we need to think about growth. And I think Golden Nugget Online Gaming has a number of quite exciting growth opportunities. Firstly, there's a derogation or the loosening of gambling laws across states in the US. Whilst a number of states in the US still don't allow online gambling, and those of you based in the US will know this much better than I do, the trend is clearly towards loosening this regulation, allowing more online gaming, and a relaxing of the regulation. This is a huge opportunity for Golden Nugget Online Gaming to establish market leadership positions in these markets as they become accessible. Next up, growth can be split in two ways. Winning new customers. This is fairly self-explanatory. It's the process of winning new customers who deposit money and play the casino games. And the second piece being driving a greater monetization of your existing customers, whether that be through introduction of new games or however they may do that. However, given that Golden Nugget Online Gaming is already a market leader in this sense, its average customers spend more than its competitors do, I do question how much room there is to grow in this way. Next up, we need to think about the impact of the health crisis. Now clearly short term, the business has benefited massively. It's driven a growth in new customers as people who were traditionally playing in physical casinos have moved to online gaming. However, as investors, we need to form a view and get comfort on what level of this will be sustained, i.e. how many customers will continue to online game versus going back to physical casinos. Clearly the company themselves are forecasting some decrease in revenues as people do transition back to physical casinos. However, this is really important to understand what the future of the business looks like. Next up is valuation, especially looking at the valuation versus its peers. In the investor presentation, the main competitors are clearly identified as DraftKings and GAN. Personally, I don't think GAN is totally relevant here. It isn't a consumer-facing business like DraftKings or other gaming businesses are. What they do is they provide the back-end technology and software to provide those casino games. So as someone who uses the online casino, you'll never actually know you're using GAN products. So personally, I do see that as a slightly different business model and not totally comparable. On an enterprise value sales basis, it's argued that Golden Nugget Online Gaming trades at a discount to its peers at 6.1 times, DraftKings at 15.2 times, and GAN at 12.9 times. My other issue here is that DraftKings is also fundamentally a speculative stock as well. What they haven't done here is compare it to well-established, recognised online gaming companies. For example, 888, which trades at 1.2 times on an EV sales basis, or Flutter that trades at around 3.9 times on an EV sales basis. When you look at it this way, it's a little more apparent that it's not trading at a massive discount to its peers. Now, this is certainly a nice trick by the investment bankers who put together this presentation, but I guess they've got to do everything they can to justify their big share of that $30 million fee. Now finally, we should look at the licensing and support services agreement. What this does is it basically outlines in a carve-out transaction like this, as the company is being separated from its old parent company, what services are shared and what contribution to those costs is made. Now this agreement to me looks pretty good. For a 3% royalty fee on the net gaming revenues, read that as sales, that's just sector jargon. In return, they'll receive support for certain accounting things, access to customer databases, payroll support, legal support, and rental and lease facilities. And this is all for an indefinite period of time. And this is good because ultimately the cost of Golden Nugget Online Gaming having to go and procure those services itself would ultimately be a lot more expensive to the company. So for me, this is good. So what am I doing about the opportunity then? So personally, I actually quite like Golden Nugget Online Gaming. Not forgetting that it's a SPAC and a speculative play here. I do feel versus some of the other SPACs, it has a more proven business model and there's less execution risk around that. Yes, to sustain the valuation, they've got to deliver on the growth plan, but I think they're as well placed as any other competitor to win the new markets as new states allow online gaming. What's also positive to me is how much equity the Golden Nugget parent company is also still maintaining in this entity, and it ensures they help support the growth of the business going forward too. For me, as always, the concern here is really around the valuation. It is high on a multiples basis compared to peers. However, as we've seen with a number of other SPAC stocks, that doesn't necessarily deter a load of investors flooding in, driving the share price up, where actually the fundamental business is not actually that attractive as an investment proposition on its own. In this situation, I like the business, I think it has good fundamentals, and acknowledging that it's a speculative play, I've taken a very small position in this company, less than 1% of my overall portfolio, and I think the long-term growth potential could be quite exciting if the business can deliver on its growth strategy. Ultimately for me, I'm investing for the long term and I'm not trying to capitalise on speculative price movements that happen in the next 6 months. Yes, while some people may make good returns doing that, ultimately the majority of people get burnt, so be careful if that is your strategy. Anyway, I hope you enjoyed this video, I hope you found it interesting. If you did, please smash the like button. It's really helpful in encouraging the algorithm to push this video to a new audience. If you like investing related content, if you want to hear about the next SPACs before they explode in price, subscribe to the channel. And as always, please let me know your thoughts and comments in the comment section below. I really enjoy getting involved in that discussion and hearing everyone's thoughts. So thank you so much for watching, and I'll see you in another video.